Next, let's talk about the tax implications resulting from forgiveness of mortgage debt. A lender is required to report to the IRS their decision to forgive any loan debt related to a borrower's mortgage. Borrowers can therefore expect to receive a 1099 from their lender regardless of how their property ends up being disposed of. Usually the amount of the debt forgiven must be reported by the borrower to the IRS on their tax return as income. However, in 2007, Congress took mercy on all of us and passed the Mortgage Forgiveness Debt Relief Act, which forgives income created by the disposition of a principal residence through a short sale, deed in lieu, or foreclosure. The Act applies to all debt forgiveness which results from the disposition of a principal residence, which takes place between 2007 and the end of 2012. In order to qualify under the Act, the borrower must show that they have used their home as their primary residence for at least 2 of the last 5 years. However, the years need not be consecutive. Please note, however, that the Act only applies to mortgage debt used to purchase or improve the residence. So second mortgage taken out to pay off or consolidate consumer debt do not qualify for this exclusion under the Act. There is also some disagreement among legal and tax professionals as to whether or not the borrower must be using the home as their primary residence at the time of the disposition. If you're not living in the home at the time of the sale or foreclosure, you'll want to discuss this issue with your tax professional so you can properly report or exclude the income on your tax return. There are some other ways to exempt debt forgiveness and 1099 income, and one of them is insolvency. If a borrower cannot meet the principal residence criteria as we discussed under the Act, they may be able to claim the 1099 income is exempt from taxation because they are insolvent. To prove insolvency, the borrower must show that their total liabilities exceed their total assets. Assets include the fair market value of all real estate and personal property, and investment income including qualified retirement plans such as 401ks. If a borrower has more liabilities than assets, then any income the lender reports as a result of the debt forgiveness would be exempt from having to be reported as taxable income up to the amount the borrower is insolvent. Another way to avoid income is to use the foreclosure process itself to exempt the debt forgiveness. Be careful on this one though, which is just another way of saying be sure to talk to your accountant first. But you may be able to use the foreclosure process itself as a way of exempting the debt forgiveness depending on the laws of your state. In those states where the foreclosure law prohibits a lender from pursuing the borrower for a deficiency post-foreclosure, that debt can likely be classified by your accountant as non-recourse debt on your tax return. So what, you may be asking at this point? Well, the IRS treats non-recourse debt differently from recourse debt under the tax code for the purposes of debt forgiveness income. If the forgiven debt is classified as non-recourse, then your accountant could decide to classify that portion of the income as exempt after the lender forgives it. So, if you're trying to decide whether or not you should short sale or go to foreclosure on a property that does not qualify under the Mortgage Debt Relief Act, such as a non-principal residence or an investment property, you should talk to an accountant about the possibility of avoiding the debt by having it classified as non-recourse debt. There are other ways to exempt 1099 income, such as offsetting business income against business losses, but if you don't qualify for an exemption, then using the foreclosure process itself may be a way to avoid taking a huge tax hit. So, here's my advice on debt forgiveness and filing your own tax return. If you ordinarily file your own taxes, but you are going to do a short sale or lose your home to foreclosure this year, I'd like to suggest that this be the year that you use the services of a professional to help you out. There are simply way too many pitfalls in the tax code that the borrower has to avoid, and too many creative, but legitimate, ways of avoiding paying taxes on the debt forgiveness income to go it alone. When I meet with clients, I always suggest they obtain the services of a qualified tax professional to answer their questions about the tax implications of dealing with a distressed property and for help filing their return. I advise you to do the same. If you don't already have an accountant to help you through this process, and you'd like to be connected with a trusted accountant in the shortsalecircle.com community who's familiar with the specialized needs of clients who are owners of distressed properties, please click on the Contact Accountant button on this page.